G'day everyone, welcome back to another update for natural gas and the ETFs. Now the price has moved up since our last update. It's been consolidating and it's at those still at a bullish level. We're going to include some back testing. Before we go any further, make sure you hit that like and subscribe button to support the channel. That'd be greatly appreciated. In terms of also a deeper dive into the trading strategy, don't forget the +1 videos which have been posted previously to look into the trading strategies we cover. In terms of the outlook, the global natural gas market in late 2025 is marked by rising demand, especially in Asia, expanding US export capacity and looming oversupply that threatens to push down prices. At the same time, infrastructure such as pipelines and transit routes remain deeply subject to geopolitical maneuvering. Russia's pipeline deal with China and Europe's efforts to decouple from Russia gas underscores the strategic nature of gas flows. Terror, war and infrastructure disruption continue to pose risks, meaning that energy security and diversification are now as important as economics in shaping gas markets. Looking at natural gas first on the weekly, the price is above the moving averages. On the prices also as the CCI is above its respective moving averages. And what we look out for is any divergence, and there's no bearish divergence to be concerned about at the moment. So the weekly is bullish. On the daily, we did have this resistance up here at 38.21. It's actually broken through that. So we're going to move that up to this new resistance level at 40.58. And since then, it's actually pulling back. Now, the CCI is pulling back as well. At the moment, we're still bullish with the price in the CCI above the moving averages. So still to take long trades on the hourly. And there's no divergence that I can see at the moment. We did the last divergence we had was this bullish divergence down here, double bottom on the CCI versus lower lows on the price. And it bounced and hit our immediate target. That was before our last update. So the daily is bullish at the moment. On the hourly, hit this resistance, as I said, this new resistance. And we did draw this bearish divergence on our last update. Now the price increased very slightly and the CCI also decreased the highs. And that was our target. Now we're going to have to readjust that very slightly because of that rise in the price. And that would have been down to that level. So we move that to that 23-38% range of Fibonacci, and you can see there it's actually penetrated into that range. The price stabilized and consolidated for a number of days until finally breaking down. Now that could be the end of it, although notice the CCI is potentially still dropping. So until we start seeing that rise and the price then break through that resistance, then we may consider that divergence complete. But at the moment, this could possibly fall lower still on the hourly. Now if we go to the 1 hour chart the back test 1 hour chart. We've taken the back test starting from here or on the 3rd of September. That's indicated here on the 1 hour chart. And again, the way you read this is whenever you start seeing divergence, here was the first bearish divergence and you would have closed out your trade once you start seeing the moving average band at this point turn down, but also the CCI turning down as well. Avoid going long during that period because the daily is still in an uptrend. Then you start seeing this break to the upside. You would have gone long there, closing it out, and avoid going long during that period until you start seeing this bullish divergence. And you would have taken a long trade there and then ridden that up to that point there at a very minimum. You're not seeing there's a first bearish divergence there during that little period. Notice as well, whenever you exit the trade during these periods, this backtest runs through the whole period, but by following those moving averages, you avoid these drawdowns. And this major one here, of course, you would have been out of the trade somewhere in that point there, maybe holding one contract or two, but you would have been out of the trade once you start seeing the moving averages bend down. And currently, you would avoid going along until we see, like I said, a clearer break to the upside on both price and CCI. So here for BOIL, we're still in a bearish momentum with the price below the moving averages, and so is the CCI. And remember, when we look at trading any particular time frame, we always trade in the direction of the higher time frame. So here if you're trading in the direction of the weekly, you want to be going short predominantly. Or in this case, if you're trading on the daily, you go in the direction of the weekly. So don't confuse it. At the moment, you'll notice the weekly is in a downtrend and the daily is pretty much consolidating, but you'll notice this bullish move on the CCI, which means predominantly probably take long trades on the 1 hour time frame. So there's a couple of mixed scenarios here, or if you prefer, stay out of the trades altogether until this shows you a clear direction if you want to see all three timelines align. So on the hourly, take in the direction of the daily, or if you're trading on the daily, trade in the direction of the weekly. So at the moment, the weekly is bearish, so taking short trades only on the daily. And zooming in on the daily for a moment, you would have taken that little long trade on the 1 hour time frame according to the daily trend, and then possibly trading on the downtrend there on the 1 hour time frame, and then likewise here bullish on the 1 hour time frame. So again, always trade in direction of the higher time frame. Now looking at the daily overall, you'll notice the CCI is rising, which is a positive. So I'd be more inclined to go long whenever there's a break above the moving averages. And notice as well that consolidation is still uncertain. This could break either way very strongly. It could go higher or lower, so we don't really know. But the CCI is giving us a little bit of a hint in terms of the direction it's moving, which is bullish at the moment. But there's no guarantee, of course. There's never any guarantee in any charts or analysis. On the hourly, again, if you're looking at going long at the moment based on the daily, with both the CCI and the price moving higher, we take long trades only on the 1 hour time period. So at the moment, looks like it could be a fresh breakout to the upside. But again, notice the consolidation and the uncertainty. I'd like to see these moving averages bend up like they were back here to be more confident, give you a better probability of success. And the other thing we'll look for is any divergence. And there's no divergence currently. That CCI is moving in alignment with the price. Now in terms of the back test, I've marked there as a long position only, but theoretically I could have marked going short there and then long again there. But here I've just shown you the long positions from about the 29th or 26th of September, that was 29th of September, from this period going long, and you would have taken those little trades and closing it out whenever you see the CCI break into the moving average band near the top there. So you would have closed it out at that point. Avoid going long or short until we start seeing this period here. That possibly could have been a point you could have gone short somewhere in this area in alignment with the daily. Then again, close out your short trades going long during that period when you see that break above the moving average. So here we've got KOLD on the weekly. First off, we're bullish. Both the price was above the moving average, but notice the CCI is broken down. So if you're trading on the daily, avoid going long or short until we see a decisive move on the weekly charts. So at the moment, neutral on the weekly. On the daily, it's hit this resistance. We had a pretty much a double top here on the price versus lower highs on the CCI. That dropped off, hit our target, bounced, and again giving us a bit of a consolidation here as well. The price breaking above the moving average, and so did the CCI, then it finally broken down again. And if you're trading on the hourly at the moment, you'll be going short according to the daily. So here on the hourly, again going short from that candle there, and you would have closed it out probably, if not there, at the very latest at that point there, when the CCI broke into the moving average range. You'll notice the CCI exit. It gives you a better return on your trade rather than waiting for the price to break into the moving average range. In this case, it wasn't too much of a difference, but sometimes the CCI breaks into it earlier and the price has a bit of a lag before it actually enters the range. So at the moment, taking short trades only, and also we look for any divergence, and there's no divergence that I can see currently. The last one we had back here was a bearish divergence, and the price broke down through that 23-38% range. In terms of the back test, again, you would have been going long from that little period, then going short from there when you see both the price and the CCI break down. That's indicated here on the 1 hour chart, taking the short entry there, again closing it out, like I said, at that point, and that would return a small little profit as well. So for UNG on the weekly, that was bearish, but notice the CCI has broken into that moving average range, so just be cautious about going short. It looks like we may be looking at breaking higher at the moment on the weekly at least. The daily's already broken higher, and there's no divergence on the weekly. Let me just zoom out a bit. Yeah, that's potentially a bullish divergence there. Let me just expand that for a moment. You can see there, sometimes it's worth it zooming in and out, of course, going from that low to that low, slightly higher lows versus the same period on the price chart. That's lower lows, so that is a bullish divergence. Again, hasn't started to work out yet, but you want to see those break higher than moving averages to have an effect. On the daily, again, it's hit this support at 1172 we drew some time ago, bounced, and on the daily it's bullish. So don't go long on the daily until you see, as I said, on the weekly those break higher. But if you are trading on the hourly, you could have taken some small trades based on the daily trend. Now at the moment, the CCI and the price are pulling back down again, and that's in alignment with the weekly, also quite bearish. But again, respecting these bullish divergence on the weekly. Let's see if there's any divergence on the daily. There's also a divergence there on a daily as well. Higher lows versus slightly lower lows on the price. That's still a bullish divergence on the daily. And on the 1 hour chart, we had a smaller bullish divergence back here, but even zooming out, that was still higher lows on the CCI versus the same period, lower lows on the price. So also a bullish divergence on the hourly. And again, you could have gone long from that candle in accordance with the daily and ridden it up to there and closing it out when that CCI broke into the moving average range. That was right near the top there. You see what I mean by closing it out a bit early on the CCI, based on the CCI, rather than waiting for the price to break down, because you just lose that little bit of profit. So here's the back test for UNG, again going long from this point when the price broke above the moving average band, and so did the CCI. That's indicated here on the 1 hour time frame, possibly entering one of those candles there, and you would have closed out with a small gain and waiting for that CCI to break down into that moving average range. Again, notice it closing out a bit before the price broke into that moving average range. For some added benefits, we do a weekly bullish share scan, and these are some of the trades we've taken in the last month, showing a $3,600 return in Aussie dollars of trading small amounts, and in percentage terms, it's returned about 9.65% of trades. So subscribe to the Patreon page, links in the description below. So thanks for watching. Hit that like and subscribe button and share it with your friends and family, and I'll see you in our next update.